Hello, this is Phil at the Laptop Trader channel on YouTube. Welcome back to our community. I'm here to share my experience and give back to the stock investing and trading community one video at a time. This video series is going to cover market cycles, stocks, and ETFs, technical analysis, trade entry, trade management, risk management, and how to create confidence by putting the odds in your favor. So good luck. My contact is laptoptraderphil@gmail.com if you have any questions. Caution, most stock traders lose money. Please protect yourself at all times. Nothing discussed in this video is trading or investing advice. This channel is for informational purposes only. Please seek qualified help if you need help investing. So here's our March agenda. So I'm going to reinforce technical analysis, looking at the 5 for February that I talked about last month, and looking at the top 8 leaders. Also, I call them the Super 8. We're going to take a technical look at 4 market ETFs and look at the top 12 sectors. Then I'm going to give you guys a quick look at technical relative strength with an example of Uber versus Lyft. So that's a pretty important concept, relative strength. And then you have to make a decision whether you want to hold or not hold a stock into an earnings event or an earnings announcement. So I have 2 examples of that go both ways there. Symbols ARHS and symbol AKAM. So that's another important consideration, what to do by earnings events. And then I'm going to reinforce my process of how I look at the overall market stage and trend. I look at the sector stage and trend. Then I look for individual stock stage and trend, and then I look for an entry to buy and go long. Using either maybe like a large wide range bar and a price contraction pattern, looking for locations or my 3-bar turn buy setup or cup and handle setups, just kind of what I look for in my process. And then I've got 3 ideas for stocks for March. Just a couple ideas there for you. So first of all, let's review the 5 I talked about last month and what happened. So this is what this stock, this ETF, symbol BOTZ, looked like last month on a weekly chart. We had a low to the left. We had some resistance in the middle as the stock moved up. Then it pulled back. We created a higher low. And then the stock started to move up again, back towards resistance. So that's a weekly chart there. Then on the daily chart, February, we had a little bit of a, I guess, a small range. And I expected this stock to break out of that range and break out over resistance. So it closed when I took this picture at about 28.84. And then let's see what happened in March. So in March, by March 8th, we've now closed at 32.38. So that's kind of what I expected to happen with that one. You can see I drew an arrow in the price where I had marked that off last month, why I liked it. And to the left, I kind of drew, it's not really a cup and handle, but just kind of where prices pulled back. And that happened on a lot of stocks last month, that pullback pattern. Kind of like a small cup, I guess, but not really a cup and handle. And then prices contracted over time and kind of consolidated over time. During that time, price slowly moved up and kind of hovered around that 20-day moving average. You can see the 3 moving averages there in blue, green, and red, which are the 20, 50, and 100-day moving average. And as they kind of move up together, it kind of creates that railroad track appearance. So kind of nice uptrend and symbol BOTZ. Next, last month, 5 to consider was symbol CREX, which is Creative Realities. I kind of just drew a general resistance line there. Pink. I had a target, and I said, this doesn't really have a great target, but it could be tradable between $3 and $4. I wouldn't say this was the best trade last month, but it did show that prices had moved up off of a bottom here on the weekly chart. Daily, we actually had a breakout last month over that resistance, so not a bad place to enter for a fairly low risk trade. Maybe on this you may have 20-25 cent stop or less. So that, when I took this photo last month, it was at 311. Let's see what happened to this one. This went up, made a new 52-week high, and has since pulled back over the last couple weeks, back down to 342. So if that's when you took, I really don't like the look of it now. It had such a nice move up, but now it's kind of giving it all back. And prices broke down under a pivot support. That PL mark there would be a pivot low. So if this was my trade, I would probably just sell it or sell most of the position, look for something else. So that's that. What happened with that one? Carvana, I like last month. It had a long stage one, kind of starting out, beginning to form an early stage two on the weekly chart. And then we had the daily chart where I had a target on this of about $60 based on the daily chart and the high to the left. We had some signs of accumulation. We had a triple bottom support. So a little bit of an increase in volume on February 6th or 7th, whatever that was. So this is one I liked last month. Let's see what happened there. This is at 46.60 in February. Now we made new highs up to 85.30. So that's kind of one of the powerful things of looking at stage trend analysis and then going down to a lower time frame and selecting a good entry. Again, this chart shows the triple bottom that I identified last month. And then this would have been a pretty good entry here around this higher low. The only negative would be it's going into earnings. So if you choose not to buy a stock going into earnings, then this is one you probably would have held off on. I bought it back here, and this day, I chose to hold through earnings, and I accepted that risk, but I also accepted the reward. So that's just how that goes sometimes. So that was a nice trade for me. I sold most of my position, probably 90% of my position in Carvana. So I took profits on that. DoorDash I liked last month. Not the cheapest stock, but it had kind of that price contraction pattern over time. We had a good earnings reaction the last earnings time. And so this looked like this was positive for DoorDash. Didn't take this one because I believe earnings were nearby, but just something to watch. On the daily chart, we had a breakout to a new high coming out of that contraction pattern over the 20-period moving average. So last month, when I took this, it closed at 111.34. Let's see what happened to DoorDash. So that worked. Had a good earnings reaction in February. As of this date, DoorDash is now at 131.80. So that's pretty nice appreciation if you took that trade. Again, I chose not to take it because earnings were nearby. And the day of earnings, prices closed higher, but then the very next day it gapped down and left a green bar with a bottoming tail, followed by two more bottoming tail bars, and then another gap up to a new level. So this is one that was kind of a little wild around earnings, but later on these small bars in this area to me indicated a lack of sellers. So this is one where if you kind of held through earnings and maybe you got stopped out, you could have re-entered in this area where these candles got tighter, and now we just made a new high in DoorDash. So that looks positive, probably for the rest of the year. And then we had Varonis Systems, symbol VRNS. Again, I had just highlighted last month, we were in stage 4, then we had this long stage 1, into the stage 2 uptrend on the weekly chart, with a closing breakout over this area on our directional bias there on the weekly time frame. On the daily chart, we had an earnings announcement either this day or the next day, and it gapped up. Even though it's a red bar, that was still a big gap up. Wall Street expected to lose 6 cents per share, and this company reported that they only lost 1 cent per share. So in Wall Street terms, that's positive. Even though they're losing money, that's still positive. We did have this price contraction into earnings, and let's see what happened with that one. That's now at 49.81, so not a huge move, but there was little to no selling pressure going into earnings. And then we got a gap up after earnings, and then kind of this pullback, and this little buy set up here. And then again, price got tight around that 20-period moving average. So this is another one that I kind of expect to still continue higher for the next quarter or so. And that was that. So that's how technical analysis can help you pick stocks. So that's what I used from last month. All 5 were actually positive at this time from where I was looking at them last month. And keep watching, keep practicing for yourself. So let's review real quick. This is what I call the Super 8. It used to be the Magnificent 7, but ever since NVIDIA over the last year has just kind of taken over the market, and now it's in the top 8. So we got another one here in our top list to watch. Microsoft, Amazon, Google, NVIDIA, Meta, Netflix, Tesla, and Apple. So let's see how these did. Amazon weekly just made a new high. It's in an uptrend, looks quite bullish, above the moving averages on the weekly time frame. And as you can see, during this uptrend, volume has actually decreased overall. So that indicates that there's not a lot of sellers present. And generally, stocks making new highs tend to continue to make new highs, because you look to the left, anybody from here over the last 2 years is making money. So why would you sell a stock if you're making money? That's why stocks with new highs or new 52-week highs is such a great indicator of future highs, because there's just a lack of sellers present. And so that's a great area to start if you're new to stock trading. Just punch up a list on the platform of your choice. 52-week new highs or stocks making new highs. Great way to start. Here's the daily chart. Right now, Amazon looks like a pretty good area to buy at, to be honest with you. Fairly tight risk to reward. Price is above the 20-day moving average. We had a nice gap up, positive reaction to earnings. And I don't see a lot of selling pressure right now on Amazon. So I think that'll probably, in the near future, be over 200 bucks. So Amazon's looking real good. Great year for them. Meta. Again, a lack of selling pressure on Meta, making new 2-year highs, probably new 5-year highs, up over $502 on Meta. So that's really impressive. It's just a basic continuation pattern there on this last earnings announcement. Large, wide range bar, green bar, and then just prices just continued higher slowly but surely. So nice uptrend in Meta. Daily, both daily and weekly, new high. Again, moving averages are in a railroad track formation. It is a little bit extended, in my opinion, right now in price, but it just doesn't appear to be a lot of sellers right now in Meta. Is this something I would buy now? No, because it's out of my price range. And Amazon, yeah, I would buy. That's in my price range. I'm comfortable under $300 stocks. Meta is out of my price range, but I'm sure it's in my mutual fund, so I'm not worried about it. But I still watch these Super 8 because they tend to move the market. new high, uptrend, NVIDIA. Probably one of the best performers, if not the best performer this year. Still in a very strong uptrend. I would say caution on this one because it just put in a weekly topping tail bar up there near the $1,000 mark and closed at 852. So price is getting kind of extended higher. I'm not saying it can't go higher, but it's really getting up there. I'm not sure their earnings and their their metrics can continue to support this type of growth. But for right now, it's still an uptrend. Daily, most of that selling that you see on that weekly chart on that topping tail took place on the last day of the week and the last day on this chart. That was about a 100-point bar. So a nice big red bar there towards the top. Sometimes that's an early indicator of a top. Again, the uptrend is still intact. I'm not saying that is the top, but I would say just caution. Okay, just caution if you own NVIDIA. May want to consider putting in some sort of trailing stop if you own NVIDIA, or raise your stop up to where this pivot's at, or put a stop under this level here so you don't give back all your profits if you have profits in NVIDIA. You can always sell half. When you get something that's extended like this, sell half your shares and then at least take some profits off the table. NVIDIA is a very, very strong company, and I would give them the benefit of the doubt versus thinking that it's going to go into some sort of major downtrend because they've been very strong. Microsoft, again, made a new high on the weekly chart, had a breakout, had this price contraction here after this retracement, then a breakout to new highs. Earnings was kind of not a big event there for them, but not a lot of selling pressure right now. Microsoft making new highs. Daily, we do see a little bit of a change in the trend daily. So changes in trend will show up first on a lower time frame. You can see sellers are kind of starting to creep in this area. It's in a higher range or a range of price here. We do have a couple lower highs. Price is now also trading under the 20-period moving average. So again, I would say caution on Microsoft at this time. And just be cautious. Again, I would give Microsoft the benefit of the doubt as far as buy, sell, or hold. Alphabet looks quite a bit worse than the others, in my opinion. Did make a new high in February, but then started selling off over the next 6 to 7 weeks. It did break support on this time frame. However, Google has broken support and broken this uptrend before, but then recovered. So will Google recover again? I don't know. We certainly have some more selling volume now coming into Google. So that would be another cautionary one to watch as far as what happens next with Google. And maybe, again, a case where you want to take some money off the table. In the daily time frame, it's in a downtrend right now. The price is actually under the 100-period moving average. So again, this is one where it's up to you. If you have a position in Google, do you want to hold, keep holding for long term, or do you want to take some money off the table? Sell half or sell a lot of your position and then look for a re-entry point. But it had a negative reaction to earnings last time. So Google must have been something in the report that was not favorable. Apple also showing some signs of resistance, double top, a lower high, getting near a major support area around maybe 165. So there has been increased selling pressure on Apple recently, and you can see that more clearly in the daily chart. We're in a daily downtrend. So another one that's showing some near-term weakness as far as Apple goes. Tesla had a large resistance area around 300. It hasn't gotten back up to that area in quite a while. I think it's been over 6 months since it's even tried to retest. And we now have lower highs. We have the stock selling off after earnings reports in a downtrend weekly and daily. So just made a new low on Tesla. If it was me, I'd be out for sure at this point, because just like stocks making new highs tend to go higher, stocks making new lows and downtrends tend to go lower. So that's my opinion on Tesla. Netflix, still an uptrend. Good reaction to earnings and a continuation pattern higher on the weekly chart. And then Netflix daily, again, just no sign of selling in Netflix. So that looks higher for the time being. And that's that for the Super 8. So let's get into our main market ETFs that we watch once a month. So let's see what we can see here. This is S&P 500, still an uptrend, just made a new high. And you can see over prices retraced, then prices contracted. We have a little buy set up here on the monthly chart. That looks higher. Weekly and a very strong uptrend looks higher. Daily, still on a daily uptrend. So that looks fine for now. Qs are about the same. New high monthly. Just showing kind of where maybe a good entry would have been on there with a cup and handle pattern and a buy set up there. A new high weekly also. So very strong trend in the index QQQ. And daily. We're still in daily uptrend. We just made a new high, but we have a couple of red bars there that are larger than normal. Not really exaggerated, like huge, but again, there is some selling pressure coming into the NASDAQ, which I believe is from, 2 or 3 of those Super 8 stocks. So that kind of dominates the NASDAQ, those large tech companies. I think that's why you see that. Russell 2000 was in a just a monthly range for the last couple of years. We just had a small breakout over that range. Not making new highs, but making a breakout over a key area over about 205, 206, and increasing buying pressure on the Russell 2000 index. Again, weekly, showing the same picture, increasing buying pressure, breakout over a key area. And daily, same thing. You can see there's not as much volume after it broke out. And again, prices contracted near a resistance point and then broke out. So that's very bullish. Even though it closed with a red candle, it's closing with a new high above the range. So closing price is still above that range. So even though it's red, I still think that's bullish for the Russell 2000 IWM symbol. Dow Industrials made a new monthly high last month after a breakout in November. So that looks bullish. On the weekly chart, still an uptrend, still bullish there. Prices above the moving averages. Daily, we're still in daily uptrend. There has been a little bit of weakness in the Dow index over the last couple of weeks, but I think that's pretty normal. Just kind of pull back in price action, so I wouldn't be concerned. So concerned with that. Then we have other ETFs I watch, like the transportation ETF, just made a new high. And you can see we had resistance to the left, then we had a support area, and then we had a higher low area in an uptrend stage 2, transportation. This is the volatility index, which shows right now a very low level of fear, which is bullish for the overall markets. Again, between like 12 and Maybe 20 is pretty low fear. Over 20, fear is definitely increasing. So that's just something I kind of watch. It doesn't mean that much. It's more of a reaction than it is a forward-looking index. So. Then we've got the mid cap ETF that I watch, symbol MDY. It's been in almost a 3-year range of some sort. Late last year, we did make a higher low, and now in February we broke out of that range and just made a new high here in March on these mid cap stocks. So if you wanted to buy kind of a general ETF, it's going to cover a wide range of stocks. This isn't a bad choice. Mid cap index ETF. This is another one I like a lot. This is more of a small cap ETF. Again, in about a 3-year range. See the volume increasing as this bull flag is forming, which is bullish. And I kind of like that to continue higher. This is a cheaper, lower cost ETF that really many times matches that IWM. So this one covers quite a few small cap stocks. So that's not a bad choice right now. Pretty good risk reward on that. Then we've got energy. This one was kind of a surprise to me that energy looked like it was going to sell off. And it did kind of sell off, and now it's kind of coming back up, making a higher pivot low. Price is definitely contracted. Volatility is contracted in energy, and that looks higher. So while that will be good for energy investors, that may be negative for the overall economy and inflation. So, but that looks like that could be going back up to 100 bucks. So, energy looks bullish. S&P 500 financials, symbol XLF ETF, also looks bullish. Had a long range, had a triple bottom, then had a breakout, and now we've had over 3 months price appreciation in the financials, which is going to relate to a couple stocks I'll show you later on that I like, that I'm actually in. So that's financials. Consumer discretionary still looks, I would say, bullish to neutral. One problem with consumer discretionary has been that Tesla has been a large part of that sector, even though that's more of a technology and transportation stock. But I believe it's also part of this consumer discretionary. So I think that's kind of holding this one down a little bit. But it looks to me like, we've had some bullish price action. We've come up over resistance and kind of held there. And looks like starting to form the next step up. So now we've got kind of this buy set up here, this 3-bar turn, and then we have a green bar, a red bar, and then another green bar, which engulfs that one, which I call a 3-bar sandwich. So that's starting to make that next step up in consumer discretionary. Then we have healthcare, XLV, looking quite bullish at this time. It was in a very long range. It's broken out of that range and pretty clear sustained buying in healthcare stocks. Just made a new high. That looks bullish. Technology, this XLK ETF is very closely related to the NASDAQ ETF QQQ. Just made new highs. I just showed on here kind of a area which would have been a decent area to buy, this pullback area. That looks bullish. Utilities is in a clear downtrend still. Has it transitioned to stage 1? That's a question mark for me. It could go up, it could go down from here. We don't know yet, but there is an indication here that the bottom is in with this big volume spike on this bottoming tail bar. I would be still bearish to neutral on utilities, which is very sensitive to inflation and interest rates. This ETF XLI is very closely related to the Dow Industrial ETF. It just made a new high. So we can see here where prices retraced, prices came up, we had this price contraction and a breakout, and now we had this buy set up here in November. Since then it's been uptrending, so that looks bullish for industrials. The materials sector has been in a range for quite a long time also. It has broken out of that range, and I would say a target on this would be $100, give or take. A near-term target would be $100 on XLB, so that looks bullish. The communications sector, XLC, clear uptrend led by Meta and Facebook. So this just kind of was a great performer, and then it was one of the worst performers during the bear market, and now it's just pretty much been straight up, except for these 3 months here. So this is probably the best time to get into that. If you're not into Facebook yet, this may be a good option for you because it's a cheaper ETF at $79.59. Would offer you a pretty decent risk to reward, but it's probably going to test the highs around $90. That'd be my forecast for XLC. The consumer staples sector, symbol XLP. I would say, we're in this range and actually rolled over. We retested this low, and then from there it's kind of just ripped higher. So consumer staples are starting to be accumulated or have been accumulated over the last 3 or 4 months. Not a bad area to look for something like value stocks, dividend paying stocks, big companies like Procter & Gamble or Colgate or General Mills comes to mind, Hershey. These big companies have a lot of money and they're not going out of business. So maybe not a bad place to look for companies like that. I would say mildly bullish. It looks like it could break out of that range. It could also retrace. So use caution there. Then we have retail stocks. Now this was kind of in a bottoming pattern for a long time, in a range, stage 1, and now it's been improving. Looks like we're starting to get on that early stage 2. We had the step up, another step up, and now maybe the start of the next step. So not sure what's leading that, whether it's just Walmart or Dollar General or Home Depot, who's leading that. I haven't really looked into that, but that's looking like an early stage 2 in retail stocks. So that's been improving. Also improving has been real estate. You can see this bottoming range. It tested once, twice, 3 or 4 times here, and then we kind of got this step up. So this looks like late stage 1, improving on the real estate sector. Again, subject to interest rates and overall economy. So we'll see what happens there, but definitely improving. This is the reason why I think these stocks are starting to improve, especially real estate, retail, and smaller cap and mid cap stocks, is because you can see interest rates moved up to a high around 5, pulled back here at around 4. Now, is this pullback going to be bought up and our interest rates going to go higher, or will interest rates level off and maybe even come down? So that remains to be seen. I do think we're in an era, not months, but I think years of just a higher normal interest rate inflationary environment that's kind of out of our control, which is led by government spending, monetary policy, and Federal Reserve actions. So I expect interest rates to stay inflated over the near future, probably in years. So I think everybody's just kind of adjusting to this new normal. But I think this near-term pullback has caused certain sectors of the market to kind of go up a little bit. That's all I would comment on interest rates there. So where would I look for new opportunities this month and over the next month? So as interest rates have improved and market participation in uptrends or improving charts called breadth, there are many areas to consider. So we've had improved participation for smaller and mid-cap companies in this bull market. Since last year into the first quarter of this year, the Super 8 stocks have dominated and accounted for most of the stock market appreciation. Now, mid-cap and small cap companies are starting to participate and appreciate in the market as interest rates have come down slightly. Again, I think a new normal of higher interest rates. Any new trades, I would still, excuse me, use caution and risk management because things can change, and energy is looking like a resumed uptrend, which will affect inflation. For new opportunities, I would be looking at smaller companies with growth and earnings in the above mentioned bullish sectors and industries. So let's take a look at the idea of relative strength quickly. It's an important concept in technical trading and in stock market investing in general. So one of the things that makes the S&P 500 so powerful is the S&P 500 is weighted towards the largest and the best companies. And that index is adjusted by market cap. And as companies move up and get stronger, at the same time they drop companies off the bottom. So you always get the best, biggest, strongest companies in the S&P 500, which is why it's so hard to beat. So that's kind of a way the market works with that index. Well, we can look for relative strength ourselves also in individual stocks. So Uber is an obvious leader in the space. They've had a relative strength and appreciating prices since July of 22 to some degree or another. And as prices have moved up, um, let's take a look. It just made a new high at 78.70 on Uber. I believe this was an IPO at about 45 bucks or somewhere there, maybe 40, 45 bucks. So we're finally getting some real movement in Uber as the leader of ride technology and ride share. Then we take a look at Lyft, its main competitor, as the follower, has been showing relative weakness over the same period of time. So I think that's pretty easy to see. As Uber has moved up, Lyft has just kind of based in this bottoming pattern. Recently, it has moved up slightly in price over the last 3 or 4 months. Not a lot, but there is some signs of accumulation in Lyft. And they did have a positive earnings reaction. So how would I trade these two? Well, I would either look for a pullback in Uber to get on board, or look for some sort of price consolidation over time for a better risk reward on Uber. Right now, it is a little bit extended on this monthly chart. As far as Lyft goes, I don't think it's a bad time to get into Lyft. And we can take a look at this weekly chart. We're actually starting to see signs of a new uptrend in Lyft. With big volume on earnings, positive earnings reaction, maybe a new step up, and pretty decent risk reward over the last couple of weeks, as indicated by the igniting bar in earnings and then 3 smaller bars. So daily, we can see what happened there. We had a positive reaction earnings, gap up, 2 large green bars on volume, and then we kind of made this cup formation here, that I drew for you. And now we've got kind of that cup and handle formation where it breaks out over that area, over the, let's say, $19 area. That could be pretty good entry with pretty good risk to reward with your stop under maybe 18 or 18 and a quarter or something like that. So Lyft is looking like a better opportunity now than it has in a long time. So that's just an example of um, relative strength, relative weakness, and a stock within the same industry playing catch up to the other player or players, however you look at that. But there's really only 2 or 3 main players in this industry, and that's Lyft, Uber. Maybe you can consider maybe something like DoorDash part of that too, or Instacart. You know, kind of the tech worker, private, where they have people listed as private contractors, not employees, industries. So that's all I have to say about that. Let's take a look at this now. This is showing the relationship between price and earnings announcements. Had a very nice uptrend in the stock, symbol AK8M, which stands for Akamai Technologies. Looked good going into earnings, and then it had a very hard sell-off after earnings. So if I was in this, I'd probably take my money off the table, take any profits I had, and either look to get back in or see if it keeps selling off or what's going to go on with this company. And daily, this just shows a reason of why I generally do not hold stocks into earnings as a trader, because this is what can happen. It can get sold off quite a bit. Now this is showing a kind of a bottoming pattern on this daily chart, which could provide maybe a place to enter again at a lower price, but only time will tell. Another one example of earnings is symbol ARHS, Arhaus Inc. And this had a positive reaction to earnings, gapped up on earnings. So this would be a reason why you would want to hold into an earnings event. Again, that's a personal choice. I chose to sell before that event, and therefore I took my risk out of the market. So that's my loss, right? That it gapped up, and now I took my money out of the market. Well, I didn't lose any money by taking the money out of the market. I still had a small profit, but I just get worried sometimes going into earnings on these smaller cap stocks. They can really go either way. You just don't know. People on the inside know, but us as retail traders, we just don't know. So, it's a personal choice whether or not to hold into an earnings event. So that's 2 examples of what can happen with that. Let's get into some possible ideas for this month and next month. This is a stock, Ally Financial, symbol ALLY. Here we have a positive reaction to earnings, and then the stock has since then traded within this range. It's touched the bottom of the range 4 or 5 times, and it's touched the top of the range 3 or 4 times too. But it's in the finance sector, which when I looked at that symbol XLF, that was more bullish than some of the others. So that's why I'm in this company right now. So that is where could you buy LI right now? Well, you could buy it if it comes back down to the bottom of the range. If you want to kind of bottom feed, you could wait till it breaks out of the range and kind of buy the breakout. Or if it breaks out, you could wait and buy the pullback. Look for buy setup. It's kind of 3 different ways you could play that chart. Capital One is another one I like, also in the finance sector. Credit card, symbol COF. Had a pretty strong move up last year, and then just kind of went back and forth. Did make this higher low pivot, had a positive reaction to earnings, and then has since then been in this range. We did have this gap down shakeout bar on volume, which kind of gapped down, then went green. That's bullish. And we went another tighter range, almost the price contraction area. So you could buy over this bar, put the stop under that for pretty good risk to reward on Capital One. Going forward, as an idea, how about Airbnb? It's been pretty long time. It's a pretty big range. It did have some higher lows. Here, this was kind of like a ceiling area I drew. And then finally, it's kind of become the floor right here. And now it's actually, this was resistance, resistance, resistance. It's kind of broken out above that resistance. Had a positive reaction to earnings. I expect this one to maybe target of $200 on Airbnb. So I like that for the rest of the year there. Daily, kind of gave us a breakout entry area back on Wednesday of this week. So you could always wait for a buy setup after that breakout, see if there's a better entry on Airbnb. So let's just review and just reinforce kind of what I use as a basic process for buying stocks. This isn't all inclusive, but just kind of something to think about or review. So I always kind of try to identify at least weekly the market stage and trend. I'll look at monthly charts once or twice a month, weekly charts and daily charts when I'm doing my weekly game plan. I also like to look for sectors that are moving or not moving and identify the stage, the trend of those sectors, which I showed you earlier. And then I always keep different lists of stocks. So I look for stocks from my list in those markets or sectors that are going up or look like they're going to go up. I always or mainly look to go long stocks or options and look for an uptrend for appreciation price. And then I'll look for patterns on my daily charts. I'll look for price contraction pattern. Mark Minervini calls it a volatility contraction pattern. He's the one that coined that phrase, I believe. So I just came up with price contraction pattern because I don't want to steal his terms. I look for that price contraction near highs or resistance, showing that pressure is building. In other words, pressure builds and all of a sudden the stock breaks out and I'm able to catch that price appreciation quickly. I also look for consolidations over time. Check out Mark Minervini's books. I believe he's got 2 or 3 books on how he trades. Very high level trader on VCP patterns. So great book. Or I'll look for a buy setup in an uptrend, a 3-bar turn on a pullback in price after breakout. It's called a consolidation in price. Okay. So a VCP pattern is essentially a consolidation over time, and a pullback in price is essentially a consolidation in price. So price can consolidate basically one of 2 ways. I'll also look for breakouts over resistance areas. I'll also look for cup and handle patterns after a large pullback. Check out William O'Neill's book, How to Make Money in Stocks. That's kind of a classic book. And then we just use position sizing and share sizing using a stop loss to mitigate our risk or control our risk in case something doesn't work out as planned. And then we use trade management once we're in the trade, where we decide when to raise stops or when to get out or take full profits or partial profits from our activities. So that is the end of this month's market update video. Thanks for watching, liking, and subscribing. If you want updates as to when I make new videos, please subscribe and you'll get those updates. I hope this helps reinforce what I am looking for in good risk to reward trades, and good luck with Phil at Laptop Trader on YouTube.